Broadcast is now starting. All attendees are in listen-only mode.
Good morning, ladies and gentlemen, and thank you for joining our Pengana's webinar series. My name is Joy Yakub, and I'm the Executive Director for the Pengana International Equity Division. For those that might be new to Pengana Capital, Pengana is a funds management business with a diverse range of strategies run by investment teams based around the world. Well, 2020 has certainly proven to be challenging and quite unpredictable. It's just really hard to believe that only a few months ago, global market valuations had pretty much reached all-time highs. I guess it's times like these where patience, specifically investor patience, can be tested. However, staying the course and thinking about the long term can really lead to better outcomes. Joining me today is the portfolio manager of the High Conviction Fund, James McDonald. James has over 22 years experience in managing money and has developed his expertise in particularly healthcare companies over the last 18 years. Recent drawdowns have opened up a number of great opportunities in the global healthcare sector that the team have been able to take advantage of. Our aim today, though, is to provide an update on the fund's performance, current positioning, and views on the impacts of COVID-19 on a high conviction portfolio of 20 stocks. We'll have time for questions at the end of the presentation, so please feel free to enter them using the box on the right-hand side of your screen. It's just a control panel there. And with that, over to you, James.
Thanks, Joy. As Joy mentioned today, I'd like to open with some comments about the positioning, performance and outlook of the fund, and then I'd like to go into a deep dive of 5 major holdings in the fund, which represent about 40% of the portfolio, 2 of which I've added recently. The fund is currently positioned to take advantage of weakness in small cap healthcare stocks, which we believe will do very well in a recovery. There's also a theme of companies in there that are seeking to benefit from the current COVID crisis, and finally looking for some names that will benefit from a recovery in the economy. Maybe just touching first on the performance of the fund. You can see it was down roughly 18% in March. Some general comments, I would say that defensive stocks have greatly outperformed cyclical stocks, and small companies have greatly underperformed large ones. In fact, the small companies in my portfolio, which are about half the fund, were down 25%, and the large stocks in the fund were actually up 4%, large healthcare funds stocks. Just looking at the strategy of the fund for those of you who aren't familiar with it, the fund can hold a maximum of 20 stocks. There's a real focus on healthcare and IT in the fund. There's about half the fund invested in small cap holdings, and it can invest. It's invested globally, with a maximum of 20% can be invested in Australia. The weightings of the stocks are really based on the potential upside and also taking in mind the risk of the holding. There's a negative ethical screen across all of the fund, so nothing that's harmful to the environment or society, and that's really part of my investing DNA that we have all at Pengana been following for a long time now. So looking at the characteristics of things that I like in a holding, I like a company with a strong competitive position. That could be a leading technology, a high market share, or a low cost. Most importantly, I really like to find companies that are trading at a significant discount to their fair value. I think that gives you downside protection and hopefully generates great long-term returns. I like companies that are under-researched. They might be out of favour or have hidden value. Companies with good cash flow generation are great. If they don't have that, I really like a strong balance sheet that makes sure the company can get through to that cash flow generations position. And quality of management is very important to us. We like companies' management who to be aligned with the other shareholders in the company, so ownership, stake, option, etc. Just looking at the current positioning of the fund, I've recently increased the weight in healthcare to 60% from 40%. Healthcare is an area I've been investing in for a long time, and I feel very comfortable investing there. But more importantly, I believe we can be confident in a recovery in healthcare spending. In the short term, some of these companies have been impacted by hospitals focusing only on COVID patients, but we know government spending will remain constant. I think there's many other areas in the economy where it's really much less clear when we will see a recovery. And so I feel that's a good place to be. As I mentioned before, there is about 20% of the portfolio invested in companies that I believe will benefit from the current crisis, and they're things like testing companies, pharmaceutical companies, and in addition, there's 10% invested in optical communications companies, which are really benefiting from the surge in internet traffic. I've been invested in optical components and communications companies for 20 years in my career, so it's an area that I know very, very well. As I touched on before, the portfolio is roughly 50% invested in small cap stocks and 30% in larger stocks. Cash is around 15% at the moment, and as opportunities come up, I will invest that cash. Maybe just on the 60% of healthcare, the exposure in the healthcare sector, I would say that not very much of that is in actual pharmaceutical companies, only about 6%. Half of that exposure is in diagnostic companies for cancer and for COVID. There's about 8% in a vaccine company, medical software, medical drug production companies. So very diversified. And I like those other areas. You don't tend to have so much technology risk. You can still get a great deal of upside, but without that sort of binary technology risk that you get in drug companies in many cases. So now I'd like to just spend a bit of time going through some of the significant holdings in the funds. You can see two at the bottom there that I've added in recent times, Gilead and Genetic Signatures. So the first company is Genetic Signatures. This is an Australian vaccine. This is an Australian medical diagnostic producer. It's in an industry that's growing at about 8% per year, so a fantastic place to be. They're actually really focused on infectious diseases, whether they be bacterial, viral, protozoan or fungal. Recently, it announced a COVID test, which has been approved in Europe and Australia, with the USA in the works. It has a market value of around 240 million, with $40 million of cash in the bank. Its main competitor is a Korean company called Seegene, which is worth 3.1 billion. Although it's clearly ahead of Genetic Signatures, I am hoping it can close some of the gap. There's currently a great shortage of RNA preparation reagents in the world. The market size is virtually unlimited. Macquarie Bank estimates at the moment that about 40 million tests per month are needed, which is about $1 to $2 billion. Stepping back a bit though, I thought I'd speak a bit more about the company generally. The company creates infectious disease panels, which are supplied to hospitals and labs around the world. One panel is for respiratory illnesses, searching for organisms like flu, pneumonia and COVID. Another enteric panel looks for gut organisms like norovirus. Another panel looks at sexually transmitted diseases. One panel looks at antibiotic resistance. Its first three approved tests have a market potential of about 820 million. You can see here the panels that I just discussed, and they're already approved in Australia and Europe. Hopefully we'll get approval in North America during this year for its gut panel. So there's plenty of potential to go for the company there. Its tests can be conducted on other companies' instruments or on its own. It's faster and more efficient to use its own equipment. And COVID is really creating a Trojan horse to get its equipment into major hospitals, which will then be able to do other tests in future. So I think that's really the important thing here. Of course, COVID is going to create a one-off for this company, but then they're going to be left with this great, hopefully, annuity stream of other tests that they can do on the equipment that they've got into the hospitals. Actually, the company raised $40 million in October last year to accelerate their business plan, including buying lab equipment to place with large hospitals and labs around the world, and hiring sales staff in the UK, Germany and USA. So it had really already laid the foundation stones, if you like, for global expansion, and then coronavirus has just come along and greatly accelerated its push. I can't tell you exactly how much money they're going to make from this test. We'll find out more from the company's quarterly update next week. I would tell you, though, it's a very scalable business model. It only takes about 2 mils of liquid to make 100 tests. So the real issue is how much chemicals can they get their hands on to ramp production. The competitor in Korea is expecting to produce something like $500 million worth of these test chemicals over the next 2 or 3 months. As I said, I don't think we can hope for anything like that. But, you know, even if it's $20 or $30 million, it'd be fantastic. They'll have a lot more cash in the bank and accelerate their business. The next company I'd like to discuss is Gilead. Now, this is a $100 billion giant biotech company in the US. It's got about 80% market share in the HIV antiviral drug business, which represents 75% of its revenue. The real reason to own this company is it's cheap. It's trading on 13 times PE. It's got 3.3% dividend yield with no debt. It's generating $8 billion a year of free cash flow, lovely compared to the market cap of $100 billion. And it's reinvesting that into a lot of small, interesting biotech companies, particularly in oncology and inflammation, things like rheumatoid arthritis. And they've got going to generate some very interesting sales from those areas over coming years. Yesterday, in fact, they partnered with a small Australian biotech company that is completely under the radar in Melbourne. Just another example in oncology. So COVID is really the icing on the cake for this company. They developed an Ebola drug called remdesivir, which is actually an infusion, not a tablet, as that picture's implying. And this company is looking very hopeful, or quite hopeful, as a treatment for COVID. There is a lot of clinical trials underway at the moment, and you can see here the various trials. The two important ones I would highlight are the two company-sponsored trials. In the middle, you can see there one with 400 patients in severe COVID and another one with 600 patients in moderate COVID. The severe patients trial will report in the next week, and the moderate patient trial will report in May. The market had a huge rally last Thursday because of a leak of 125 patients in the severe COVID patient trial, and that was in Chicago. It was rather unusual that an investigator made some comments that it was going very well, and the number of fatalities was lower than they thought. Well, that trial does not have a placebo control arm, so there's really nothing to compare it to. So that was probably a little bit too optimistic reaction. But the thing that really caught my attention was on the weekend, an animal study in monkeys was released in 12 monkeys where they were all infected with COVID. And then 12 hours later, so very quickly afterwards, half of them were given Gilead's drug, and 5 of the 6 monkeys had no breathing difficulties after 7 days. 1 had some breathing difficulties. The 6 monkeys who didn't get the drug all had severe breathing difficulties. So just another little bit of information that gives us some hope. I think most analysts believe that the moderate patients should respond better to this drug. The earlier it's given to them, the better. So I'm actually much more hopeful about the results that we'll get in late May, not the initial results in late April. These trials have all been greatly increased in size. The 400 person study is now 6,000, and the 600 person study is 1,600, but we will still get the same initial readout. What does this all mean for Gilead? You know, it's a bit unclear. I believe sentiment alone will lift the share price from 13 times PE. Maybe it could go to 15 or 16. Initially, the drug will be sold at a very low price. But if we look at Roche's drug Tamiflu, sold many billions of dollars to governments wanting to build stockpiles over 8 or 10 years of SARS and MERS. So this, particularly if a vaccine isn't successful, this could be a very important treatment for COVID. As I mentioned before, the real core of the business is HIV, and I think you can see there that it has been a business that's grown very nicely. The outlook for HIV is now very modest, maybe 1 or 2% a year. Hepatitis C was a real boom. They created a functional cure for hepatitis C, which is a huge problem in the world, causes liver disease and ultimately can cause cancer of the liver. That drug sold for $100,000 initially and now is only selling for $20,000 a treatment. There's still a lot of untreated hepatitis patients in the US, particularly in prisons, because the main source of transmission is sharing needles. But states don't have the funding to treat the patients, and about 70% of people don't actually know they even have the disease, so a lot more screening is required. Something like 100 million people in the world still have hepatitis C. So it's not really a growth business for them anymore because of those factors that I mentioned, just the ability to pay, but that should continue to be a nice business for the company. Maybe just turning now to a Danish company called Bavarian Nordic. This company is a vaccine producer. The factory you can see there is based just outside of Copenhagen. The current market cap is about $1.2 billion and it's got 200 million of cash. As I mentioned before, we like vaccine producers, not very competitive markets, and they don't face patent cliffs the way many other drugs do. So the company has 3 approved vaccines at the moment, 1 for smallpox and monkeypox, and it just acquired 2 vaccines from GSK, 1 for rabies and 1 for tick-borne encephalitis. Rabies still kills about 55,000 people around the world each year, and in the US about 5,000 people are infected, mostly from wild animals in the US, but from dogs in other parts of the world. The 2 vaccines it's just acquired generate $200 million a year in revenue and about $80 million of profits. And as I said before, it's a $1.2 billion market cap, so that alone is a big part of the valuation. The smallpox vaccine, smallpox was eradicated from the world in the 1980s, but the US government is worried about bioterrorism, and they've given Bavarian Nordic an order for about $450 million to build a stockpile of its vaccine, which will be processed over the next 3 or 4 years. And after that, it should lead to a steady stream of about $100 million of highly profitable business for the company. So those 3 businesses alone can generate $300 to $400 million, 150 million or more in operating profit. And then it's got some additional products, an Ebola vaccine that it developed with Johnson & Johnson, where I expect more orders this year, potentially another $100 million order. And this RSV vaccine, I'd just like to touch on. RSV, or rhino-syncytial virus, is similar to the flu, causes 3 million hospitalisations a year around the world and kills about 100,000 people, particularly in elderly and children. And Bavarian Nordic has the lead vaccine, which will go into phase 3 next year for that virus. It's one of the great final viral markets that hasn't been addressed or solved. Of course, the flu, the common cold are two other big ones. But this could be a very interesting $1 billion in revenue type business for Bavarian Nordic or more. So we won't see results from that study until 22 and maybe 23. So a bit of a further time frame there. And they also have some cancer vaccines. But I feel very excited about Bavarian Nordic. They did a rights issue to pay for the 2 GSK vaccines last month, and we doubled our stake in the company. It now represents about 9% of the fund. The next company I'd like to talk about is Helix. This is an Australian cancer diagnostic producer. Its core technology is molecularly targeted radiation, which is where you attach a radioactive particle to an antibody or chemical, which selectively attaches to cancer cells. At low doses, it can be used in medical imaging, or at high doses, it can be used as a treatment. I regard management very highly. I know at the introduction I said we regard management as very important. In this case, the Chief Medical Officer, David Cade, left Cochlear to become the Chief Medical Officer at Helix at the end of last year. Prior to that, he was at Certex Medical, where I got to know him very well. The company's main product is Illya, and that is a product used to diagnose metastatic prostate cancer, which is spread to the other parts of the body. And this is just a slide showing you how the company's product is better able to identify cancers than the older technology. And it's now been widely tested in studies. It's been incorporated into the American College of Oncologists guidelines for use, as well as European guidelines. Last month, the FDA actually reviewed the product, gave the company very positive feedback about their efficacy and safety data, and they will finalise the submission in the next week or two to the FDA, and they're hoping to get the product approved by the end of the year. It's a bit more complicated than that, actually, because the product is already widely used around the world, which is what I really like about the company. There's over 100 sites around the world, hospitals using the product at the moment. 12,000 people were treated with the product last year. It's been distributed by the largest drug wholesale company in North America called Cardinal Health. And so the real issue is, at the moment, it's only selling for $300 a dose. When they get FDA approval, hopefully at the end of the year, the price increases from $300 to $4,000 a dose. Europe won't be that high, probably half of that, but it will absolutely transform the business model of the company. And the management feels very confident that they can get up to around 200 million Australian dollars of revenue within sort of 12 months type after launch, or at least a run rate of that, which would generate about $100 million of profit. This company only has a market value of 280 million Australian dollars, and it has $30 million of cash in the bank, 35, which is enough to get them through till the end of next year and break even. But you know, I think that's an extraordinary valuation. And it's not a one-trick pony. They have a whole pipeline of other products, a kidney cancer diagnostic, as well as some treatments for prostate cancer, for kidney cancer, and brain cancer. So really a very interesting product. The last company I'd like to speak about is Photocure, and this is the largest holding in the fund. I've been an investor in Photocure for more than 10 years and involved with changing the board some years ago to get a really top-notch international board in place, who've subsequently hired a great new CEO. This is a bladder cancer diagnostic. As I mentioned, you inject a liquid into the bladder. It glows pink when it comes into contact with cancer, and a light is shined on it. It's been very successful in Europe, but the company never was very successful in making a lot of money from it because they have a distributor. In the US, they have built their own sales network. It's early days. It's only got 2 or 3% penetration in the US. Germany, about 30% of cancer surgery uses the product. In Scandinavia, something like 80% of surgical procedures use the product. It's used both in the surgery and then in the follow-up surveillance. It's a relatively small company, 140 million US dollars, with about 15 million of cash in the bank. In February, the company laid out a plan to get its revenue to about 80 or 90 million US dollars by 2023. It's currently roughly $30 million. I think that's entirely possible. There will be some short-term interruption in their business in Q2 and Q3 as hospitals in the US are disrupted. A lot of their patients actually are still having the procedure. Half of their patients are high-risk bladder cancer patients who can't defer the procedure, but some of the less serious patients will potentially push out the screening by 6 months. So a bit of impact in the short term, but really feel very confident in the long term. And as I mentioned, if they can get to 80 or 90 million US dollars, it's got a 98% gross margin. It could be a company generating 30 or 40 million dollars of operating profit relative to a 130 million dollar market cap. I think there's great potential in the share price of this company. So there's some of the, sorry, just one more point there is it's a sort of a razor and razor blade business model. They need to put out the light source first, which cost about $80,000, and then a liquid, which cost $1,000. So nice to see the light source has been put in place, which is a sort of a lead indicator of the longer term liquid sales. So I think that's a quick summary of the overall portfolio. As I mentioned, it is a high conviction fund, 20 stocks. We see great upside potential in many of the holdings. We're taking advantage of opportunities in the healthcare space, which we think are poised for an upturn. And there really is some great opportunities in the portfolio. So thanks a lot for listening, and with that, I'll throw it open to questions.
Thanks, Jim. I'll open it up. I've seen some questions come through now, ladies and gentlemen, but we'll start with this one. Jim, there's currently about 60% of the portfolio allocated to healthcare, which is probably about 45% overweight versus the benchmark. Did you have that position before the market turned down, sort of before January, or was this something that you've really aggressively bought into over the last 3 months?
No, it is. I think prior to the downturn, it was about 40%, and I have increased the weighting in healthcare, particularly in some of the smaller names, as I mentioned, Bavarian Nordic, Genetic Signatures, and I do see that as being a great opportunity. I've done very well out of investing in healthcare in the past, up until January. The fund was performing extremely well, and a lot of that was a result of healthcare investments. So really turning to an area that we feel comfortable with. We think there is going to be a very sure recovery in the space.
Okay, thank you. Just with the portfolio, it is a very concentrated portfolio. It's got 20 stocks. How do you see the positioning? I mean, are you looking at balancing it in any way, or you're just looking at your best ideas?
Yeah, we do have some recovery plays in the portfolio as well. Uber is a name that you'll all know. I think that's a business that will potentially get stronger through this crisis as some of its competitors are in more difficulty. Travel will, of course, eventually pick up, and I think people may want to travel in cars more than in public transport. There's a property holding in there that was hard hit, Howard Hughes, with a great property portfolio around major US cities. In the short term, of course, going through a terrible time, but I think long-term land will be a great place to be positioned. So there is about 12 or 13% in companies where I'm kind of looking through the noise, and that is potentially an area that I'll add to as we get more information about the speed of a recovery. But I am somewhat concerned. I think we are, as a team, very concerned about the speed of a recovery. Human nature is difficult to predict. People will, of course, become much more cautious as a result of this. And we don't know when people will feel confident to start traveling again. So we are cautious in that.
Fine, yeah, that's true. I mean, who knows when everything would just go back to normal, and I think that will be quite difficult to forecast. I mean, it always is. You mentioned 17% cash in the portfolio. Have you been increasing the allocation or decreasing it as markets have fallen? Because this is a concentrated portfolio, do you feel the need maybe to put it more into cash until those opportunities come up? Can you give us just a bit of an example of what you're waiting for, what things you might be deploying that cash in soon?
Yeah, so cash was above 20%, and I've taken that back down with recent purchases, and we'll continue to opportunistically buy stocks as things come up. I do believe that there will be more volatility, and we may well get potential to have another crack at some names at much lower prices. Can't say for sure, of course, but it is nice to have some cash to take advantage of that volatility.
Thanks, James. Just another question that's come through just around, again, just a couple more on some of these healthcare positions. What kind of probability have you placed on small cap healthcare stocks doing well in the market recovery? And is there a possibility that the market has already priced some of these factors in?
I think a lot of these stocks are still well below the levels they were trading at 3 months ago or 2 months ago. Photocure is still down 50%. Bavarian Nordic's probably down 30 or 40, Helix down 30 or 40. So I don't think that the market is priced in a recovery, and I think there's still most people hiding in larger cap stocks that are more liquid before they go back into smaller names generally. As I said before, the smaller cap market has greatly underperformed larger stocks. So I think that will just take time for people to rotate back into these names. Certainly the large cap healthcare names have really done extremely well, and in many cases, or in some cases at record highs. So I do think there's a lot of scope for the smaller companies to recover.
And any issues relating to competitors as well of these companies? I mean, if any of these competitors find the solution, do you think this will put pressure on the businesses you currently own?
Yeah, it's an interesting question, isn't it? I mean, vaccines might be an interesting, I was going to touch on this before actually. The leading vaccine companies have combined the leading COVID vaccine companies, there's about 4 or 5 of them, now have a combined market value of about $30 billion US. Moderna is by far in the lead. Another company called BioNTech, CanSino in China, Inovio. And they're very optimistic about finding vaccines, and already in human trials, potentially could start vaccinating healthcare workers by sort of September type timeframe. And that could, I guess, change the outlook for, say, Gilead's treatment or the market generally. So that's something to watch. There are other people who say we'll never find a vaccine. Ian Fraser, the famous Australian virologist, wrote an interesting article in the ABC last week on that topic. He developed the Gardasil for vaccinating children against HPV. So there is a lot of debate about the vaccine space and how quickly that might change the outlook for the market. It's not an area I've invested in because it's really unclear which one. There's 80 companies developing vaccines, and unclear which one of those will succeed. They're also getting a lot of government money, and it's not clear how much they'll be able to sell those vaccines for. Johnson & Johnson has said it will sell its vaccine at cost. So profitability is unclear too.
Yeah, that is interesting. This is probably not exclusive to the US, but the current fiscal stimulation there is creating a little bit of uncertainty around the healthcare sector and the potential for a democratic government. But, looking at these funding mechanisms that they have, could they be changed as Congress deals with the growing deficit? And should we possibly be concerned about these holdings?
Yes, it's a very topical question, and one thing I take a great deal of comfort from in the portfolio is that most of the healthcare holdings are not selling particularly expensive treatments. Photocure's costs $1,000. Bavarian Nordic is $50 a dose for the smallpox vaccine, which is actually paid for by the Department of Defence. So, also protected. Helix, at $4,000 is getting a bit more expensive. It's really only one or two names like Gilead. The HIV medication is quite high, but there is a risk. America's spending twice as much as the rest of the world as a percentage of GDP on healthcare, I think around 20%. And I think there is a constant pressure for them to reduce that. Interestingly, drugs only account for about 2 or 3% of that spending, so 10 or 15% of the healthcare portion. And this recent crisis, I think, actually has changed the dynamic a bit, where governments might say, wow, healthcare R&D is really important. Maybe we do need slightly higher drug prices to encourage people to invest. So it'll be interesting to see how that plays out. But clearly, Joe Biden is a much more moderate candidate in the Democratic camp than Bernie Sanders was, which I think means that we won't see such radical healthcare proposals come out in any case.
And James, what are your views on the possibility that a vaccine isn't exactly too far away? Do you think the timing of the vaccine is going to affect your investment decisions?
Look, I think it will be positive for sentiment in the next 2 or 3 months if we start to get news on. I think what we'll see initially is whether they can create enough antibodies, and there's a lot of work trying to work out how many antibodies, what percentage of antibodies do you need in your blood to give you protection. So that sort of information could come out quite quickly. I think what we won't know is how long the vaccine is then effective for. Is it months? Is it years? What percentage roughly of people get, or what percentage of people would get protection? I think the feeling is, even if a vaccine only protects 60% of people for a few months, that would still be helpful for, say, vaccinating healthcare workers. And I think governments will be cautious about mass vaccination of the population, given there's been some history with vaccines about them actually causing harm. So I would be surprised if we have mass vaccinations within 12 months as a result of that. I could be wrong. I guess if there's a major second wave that people keep talking about, maybe governments would feel more pressure to roll out a vaccine more quickly. But it is certainly, and I think if Gilead's results were to be good, I think all of those things would be helpful for the market outlook, where people would then feel more confident to go out, eat at restaurants and travel. So I am really watching that very carefully, and that would influence, I think, how I invest and where I invest, depending on some of those clinical studies.
Well, Gilead has had pretty good, I mean, it's got good progress there. And even, remdesivir, I think, if I'm pronouncing it correctly, I always have trouble with that. But how quickly can these companies actually increase production?
Yeah, it's interesting. At the moment, Gilead said they can produce 150,000 doses pretty quickly for enough people, for 150,000 patients, and get up to 1 million by the end of the year. But they are also in talk with Indian generic drug producers to much more quickly ramp up production. So, and it is actually a small molecule, which is encouraging. They tend to be easier to produce. So I feel like if the results were good, it is something that we could really quite quickly increase the production of. I guess governments would then want to build up stockpiles, even if, in the short term, it might look like the number of new cases is quite low.
Thanks, James. I've got a couple more questions and then I might have to wrap this up. But with Gilead, you've got Gilead positions, you've got other global businesses. What about CSL, and do you own Johnson & Johnson?
No, I don't. I don't have, I haven't spent a lot of time looking at CSL. It's a wonderful business. There's a couple of international ones, Grifols and Takeda in Japan. They're in the same space. But it does always strike me as fairly pricey, but I'm not close to it, so I shouldn't comment. And Johnson & Johnson's another wonderful business, but not particularly cheap either. As I said, my strategy is really looking for companies that I think are really very substantially undervalued, and hoping that can generate some very substantial returns for us longer term. But healthcare, there is a lot of great companies out there, and it really is a good place to be invested. It changes the world. You can generate great returns, and you at least have this government mandated spending, which gives you this good downside protection.
Thanks, James. And is this more of a long-term play as well, in terms of your healthcare position, 60%, or can you shift? I mean, what's your strategy there? I mean, specifically with COVID and should the vaccine, okay, say if the vaccines had worked and the treatments are all out, I mean, where does that place the portfolio?
Yes, I think a lot of the holdings, as I've just given a summary, should be able to generate long-term returns. Even those ones I mentioned, genetic signatures before. Of course, COVID's going to pass. It'll really then be about ramping up the rest of its diagnostic portfolio. I think these are going to be great holdings, irrespective of what happens with COVID, and I hope to hold on for a long time. Something like Gilead is a bit more opportunistic, I guess. If the crisis passes, then potentially I'll maybe move on and rotate that into some more economically sensitive names. But at this stage, I feel very happy with the positioning. I have always had a high weighting in healthcare. It is higher than it has been. But I think it's a great long-term thematic to be invested in healthcare.
Okay, thanks, James. Ladies and gentlemen, we will have to wrap it up here. Thank you very much for sending those questions through. I know I didn't get through all of them, but we will touch base with you. We'll get a member of the distribution team to contact you directly. If you're interested, a recording of the webcast will be made available. You can find it at pengana.com/webinar. And you can also register for some of the other series. We've got about 4 remaining in this one. So please, if you want to get some more insights, just register at the same location. With that, just once again, thank you so much for joining us, and stay well, everyone. Thank you.